Hello, ladies and gentlemen, crypto deep divers. Welcome back to Weekly Crypto. Today, I'm going to talk about gold to silver ratio and inflation, how this affect the price of silver and interest rate. Also, I will talk about all of the world's money and market in one visualization. So basically, this is compare the world money and market uh, in terms of silver and cryptocurrency, and how does this, uh, in terms of market cap, how does it fit into those the whole scheme of thing in the world total world money supply. Just in case you're new to the channel, just to remind everybody that EOSBET is having an interactive airdrop. So in order to qualify for this airdrop, you have to roll the dice and pay the game. And once you roll the dice, you're going to get the airdrop automatically. So, and also EOSBET token holder, you can get some payout next month or dividends. If you're interested, you can check it out and you can click my referral link that will help out my channel. And also, Higher Vibes is having an airdrop as well. The airdrop day is November 5th, snapshot is November 4th. So make sure you transfer your EOS token out of the exchange so you don't miss out these airdrops. And also, BetDice is also having some lucky draw, and they also require you to use a scatter wallet. So make sure you log in your scatter wallet to do the lucky draw. This is free. And also, there's options in payout, and you can stake your token. So you can stake your, I still have 93 dice token I can stake. So I can stake my token and earn some reward. So the payout schedule is they settle every hour based on your stake ratio. Your portion of the payout will be credited to your balance and can be claimed at your convenience. So this is at the balance, so you can claim anytime you want. So I would suggest you claim pretty frequently or periodically, but probably every few days or whatever, and before this is gone, because they can change the rules anytime. So once you claim the token, it will automatically go to your EOS wallet. So if you're interested, you can click the link below that will help out my channel as well. So let's before we get into that, make sure you subscribe to my channel so you don't miss out the upcoming airdrop giveaway, half off or ICO. Also, you can follow me on Twitter as well. And let's talk about the gold to silver ratio. So the gold to silver ratio back in 1979 is go all the way to 1515. So gold to silver ratio, basically you use the price of gold divided by the price of silver. 1979 is 15, the ratio. What about right now? The ratio right now is almost like 80. 80. So what happened in 1979? In 1979, we have hyperinflation. You can see the inflation is almost 14%. And if you go to the historical interest rate at the time, it's almost like 13%, because you have to increase interest rate in order to fight the inflation. So at the time, the silver price at the time in 1979, because of the hyperinflation, you have the price of silver is 116 at the peak in January 1980. So if inflation is coming, and the price of silver will go up really high. I think the potential of silver is more than gold because of the gold to silver ratio. Right now is almost in 70, 80 or something, in 80. And remember back in super hyperinflation during 1979, it's almost go down to 15, the ratio, 15. So the reason I want to bring this out is because remember 2008, after the financial collapse, we have an easy money policy, QE1, QE2, QE3, QE4, QE infinity. QE basically is quantitative easing, printing money out of thin air. So remember Ben Bernanke, the previous Fed chairman, and he said he wanted to create a wealth effect so that will pop up the price of stock market as well as real estate. because of this easy money policy, all this free money pumping up the stock market as well as the real estate market. And during that financial crisis, it's very interesting, some of the local bank like credit union, they they are not exposed to those credit default swap and those toxic mortgage, right? And they still receive free money. So it's like even though you are financially sound, some small bank, local bank or credit union, they did not expose to toxic asset, they still receive a whole bunch of free money. So because some of the bank, the president say, hey, I don't need the money. Our bank is fine. We don't expose to the toxic asset during the financial crisis. But then they said, the Fed saying that, oh, everybody got all this free money. So because of all this free money, easy money policy for the last 10 years, all this asset price has been popping up. So the thing is right now they're trying to rewind it. They increase the interest rate. I think it's a little bit too late. They should rewind this easy money policy probably 3 or 4 years ago. Right now, I think it's a little bit too late. And I'm not sure, maybe I'm wrong, but I think it's too late. So right now, all the asset prices are already popping up. And if you go to San Francisco, the real estate price in Vancouver, in Toronto, in Sydney, Australia, and in some part of the Asia country, so different parts of the country, of the world, the price of the asset is gone insanely crazy. It's not even affordable for average people. And so, for example, in San Francisco or Toronto or Vancouver is insanely high. And I don't know about Sydney. I think Sydney is also high. If you're from Australia, please comment below what's the housing market over there. I think it's also crazy there as well. And because of because of this, if there's hyperinflation in the future, the silver prices will may possibly go all the way up to $100. You never know. But anyway, so let's talk about all of the world's money and market in one visualization. So this is basically they're talking about this is all of the total money in the world. I'm supposed to talk about this part 2 series. So I talked about this in last Friday. This is I talk about the asset performance for during the mini stock market crash. Remember November 10, we have a global reset. So I also talk about global reset in this video. And this video is pretty eerie because this article published by the Economist, they have a October 10, 2018. This is exactly what happened on October 10, November 18. We have a mini stock market crash. The Dow dropped more than 800 points in just one single day. It's a very anyway. But in crypto, 800 is nothing, right? But in traditional stock market, 800 points is a big deal. So anyway, so I talk about the asset performance, Bitcoin versus gold versus silver and versus U.S. Treasury, how they performs during the mini stock market crash. And people are talking about that because of the stock market crash, and they're going to go to cryptocurrency as a safe haven. Well, this is not true. Remember the stock market crash a few weeks on October 10? They go to Treasury first. Remember, you can go back to my this video. I talk about the U.S. 10-year Treasury. They spike up to almost 3.25% for the 10-year Treasury, the interest rate. Usually is like less than 3%. 3.25 is pretty significant. So they spike up during the October 10 financial the stock market mini crash. The money flow to the U.S. Treasury first, and then they go to gold and silver. It doesn't go to cryptocurrency. Cryptocurrency, the Bitcoin get to nowhere, right? And I also talk about the Bitcoin pump. This is just a headline, but in this video, I said it's not a Bitcoin pump because remember we have a CME future contract expired today. On Monday, I talk about that there will not be any pump. Most likely we don't have a pump because of the Bitcoin future contract is not that much, it's not that many. Also, the spread between the short and long position is not that big. It's only 64 spread. You can go back to this video, I talk about that. Usually the spread is bigger when the short position is more than long position and all that, then they're more likely to have a pump, because in order to liquidate the short position, they're going to pump up the price and liquidate all the short position, become worthless wallpaper, right? So you can check back my these two videos. So there's no pump, as I mentioned, on Monday and Tuesday. And let's get back to the scheme of thing. So in terms of the silver market in the world, like compared to the total world's money or money supply in the global scheme of thing, silver is very tiny market. So the value of the above ground silver stock is about 70 billion. I think it's probably 14 to 15 billion, because right now the price of silver is around 14 point something. So it's around 14, 15 billion at this time. And here you can see this represent each square represent 100 billion. So this is just 17 billion. The whole scheme of things is bigger than that. This is tiny amount of market cap, seriously. And in terms of cryptocurrency, and you can see the world fastest growing asset is cryptocurrency. But even Bitcoin looks very tiny in the grand scheme of things when compared to other global market. And you can see Bitcoin is, let's go to the coin market cap quickly. This is 100 billion. Let's see. So right now, the Bitcoin coin market cap is around 112 billion. And for Ethereum, it's 28 billion. I think this probably published a little bit early on, so may not be accurate. So right now, let's go to coin market cap. And Ethereum is around 20 billion in terms of this whole scheme of thing. And if you right now the coin market cap, the total coin market cap right now is around 209 billion. So if you minus those two off, it's around 77 billion. So the rest, which is the altcoin, is 77 billion. So you see the whole scheme of thing, you can see it's very tiny amount compared to Microsoft or Berkshire Hathaway. So the biggest company right now for Apple is the world's largest public company by market cap, which is worth around over 800 billion. Look at Bitcoin, it's 100 billion. So this is tiny amount. And Ethereum is even tiny, and the rest of the altcoin is even more tiny as well. And in terms of, don't forget, this is 1 little square of this is considered as 100 billion. So in terms of Microsoft and Alphabet, Google, Apple, Facebook, Amazon. So for Apple is 807 billion. The world's richest people, 50 richest people, total about 1.9 trillion. So Bill Gates 89 billion, Jeff Bezos 84 billion, Warren Buffett 81 billion, Mark Zuckerberg 73 billion, Jack Ma Alibaba 39 billion, and Elon Musk 21 billion. So compared to the whole scheme of thing, it's not that much, seriously. So for the state of California, California is the most populous state and is also an economic powerhouse with GDP of about 2.9 trillion. And you know, they have a lot of high-tech, Silicon Valley, all the startup over there. They have very highly innovations down there and all that. And federal balance sheet is 3.5 trillion. Those are the US Treasury, the debt and all that. And because between 2008 and 2014, the Fed balance sheet jumped to 4.45 trillion from 1 trillion. So due to controversial quantitative easing, I talk about QE program, which is printing money out of thin air. And also for the currency and banknotes, the total value of all of the world coins and banknotes is roughly 7.6 trillion. So you can see China, Eurozone, the rest of the world, US, this is just the coins and bank notes. Basically, the bank notes is not backed by anything, right? It's just based on faith because of remember I think the oil crisis, and then there's an embargo during that time, and then I think Nixon delinked the gold standard in the 70s. And also gold, the world gold is around 7.7 trillion if you're using the price of 1,200 per ounce. So 7.7 trillion compared to silver is only 17 billion. 15 billion. Because current price of silver is like 14 to 15 bucks, right, per ounce. So, and also the stock market, look at the stock market, and the market capitalization of all the world stock market is 73 trillion, and US is like 38%. And in UK is only 5%, and in Eurozone is 11%, and 10% in China, 7% in Japan, and the rest of the world is here. So you can see US like global stock market is like 38% of the 73 trillion. And also global money supply, and the total value of the world's easily accessible money is 36.8 trillion. And this including world's coins. This just the coin that I don't think those are talking about silver or gold, just the coin, bank notes, checking deposit. So those are just basically fiat currency, right? And the broad money, which is around 90.4 trillion. This includes coin, bank notes, money market account, as well as saving, checking, and time deposit. Those are fiat currency. And remember, we talk about frictional banking system. And basically, even though you're FDIC insured, they only require probably 2% of the reserve. That means when you deposit 10,000 to the bank only required to reserve probably around 200 bucks, and then the rest they just loan out to the people, right? And 8% is physical. They physically hold it. 92% is probably it's like non-physical. You don't own it. This is like fiat currency. And don't forget, one of this little square is 100 billion. And in terms of global debt, the debt is huge. And the total amount of debt, including accumulated by government, corporations, household, it adds up to 215 trillion, which is 325% of the global GDP. That is huge in terms of the debt. You can see how gigantic is this. And then 70 trillion of the world debt, 33% was added to the last decade. Yeah, because of the QE, right? The QE, and then the quantitative easing, because after the financial collapse, they need to use all this this funny money or free money to buy those toxic assets in order to save the big banks and all that. And then global debt is currently at a record high, partially thanks to the sky-high expansion of credit in China. And remember, in China, after the financial collapse, they keep on expanding and expanding. They build a lot of city, and nobody even live in those cities. They are called like ghost city or whatever. So you can see they keep on expanding the debt as a percentage of the GDP. And in terms of global real estate, for commercial real estate, the global real estate estimate value of all the developed real estate is 217 trillion. And this is including commercial, residential, office, retail space, hotel, industrial land, agriculture, all this. So you can see commercial is is not a very big sector, and also agricultural real estate is not that big. And this is the household debt, the household real estate. This is gigantic. You can see 13% is the commercial, 75% is all in the house, the mortgage, and 12% is only for agriculture. So this is like 162 trillion in terms of the debt, and only 29 trillion for the commercial, and only 26 trillion for the agriculture. And another funny thing is 21% of the world's total residential asset value is in North America, despite the fact that only 5% of the population lives here. And also Europe contains 24% of the residential asset by value, but only houses 11% of the population. So you can see the residential debt is pretty gigantic. And for derivatives, so derivative market, this is the low-end estimate of the size of the global derivative, which is 544 trillion. This is huge on a contract basis. So derivative basically is just a contract between the two or more parties, and that derive the value in terms of performance of the underlying asset, basically just like the Bitcoin future contract for CME, CBOE. You don't have to hold the Bitcoin in order to participate buying those contracts. Those are just a contract to basically predict the price, whether to go up or go down in order to make money. So those are just very speculative, just a speculative contract. You don't have to hold the real asset basically. So this is a future contract, forward contract, options, warrant, swap. And warrant, you don't want to even touch warrant, right? You're going to lose it. And in terms of derivatives, look at that. Oh my God, this is like huge. Like keep going on and on. And also, bank typically use high amount of leverage to attain the position. For example, derivatives such as the CME, right? They use a whole bunch of derivatives. They also trade commodity, gold and silver, as well as livestock, cattle. Also, they trade soybean as well. And the majority of derivatives are traded outside of the exchange between private companies. And then this is OTC, right? Just like those whales, they go to Genesis Mining or go to some OTC to buy the Bitcoin. They don't need to go to the exchange. So they have a lot of over-the-counter deal. Collaterals, lies, debt obligation, and credit default swap are the two derivatives that are now infamous for their role in the 2008 financial crisis. Yeah, absolutely, because of the credit default swap and all that. Those toxic mortgage. And then they repackage that toxic mortgage, and then they give a AAA rating and then sell it to the investor. This is crazy. And also, this is just a low-end estimate of this derivative, like 544 trillion. And the high end is 1.2 quadrillion for this derivatives contract. Isn't it scary? And also, many finance professionals consider derivative to be zero-sum trade. Yes, it's a zero-sum game basically. And there's a winner and loser on each side of the bet. Absolutely. I mean, if you go to Vegas, Vegas always win, right? Most of the time. So other experts warn that massive size of derivative could contain significant risk of consequences of the global market. Yeah, we may be heading for another global financial collapse. We never know. And the positives are derivatives can be used to help allocate and take price risk out of everything from coin to cattle to stock. These are good derivatives that are self-regulating, such as interest rate swap and currency forward. And I have been working exchange for 41 years. I do not think regulation is incompatible with an efficient market. I think derivatives provide efficiency. This is from Dr. Richard Sandor. And Warren Buffett. So let's see Warren Buffett say. Warren Buffett said the derivatives is now well out of the bottle, and this instrument will almost certainly multiply in variety and number until some events makes their toxicity clear. Central banks and governments have so far found no effective way to control or even monitor the risks posed by this contract. In my views, derivatives are financial weapons of mass destruction, carrying danger that, while now latent, which is like dormant, are potentially lethal. So basically, Warren Buffett saying that derivatives are financial weapons of mass destruction. Another Jeff Green talk about if there were no derivatives, there will be no bank loans at all today because people want to get their fixed 30-year like home mortgage, right? And banks don't want to keep the 30-year loans on their books. Yeah, that's absolutely true because right now a lot of banks they even though you get a mortgage from them, they will sell it to Fannie Mae. Um, they usually sell the less desirable mortgage to Fannie Mae. For example, if those houses in hurricane prone area, for example in Florida, they probably after you get the mortgage from whatever bank you got, they will turn around and sell it to Fannie Mae. So this is not a surprise at all. So there's also the gross value of the derivatives, which stand for 20.7 trillion as a low end estimate. And the value is still very large anyway. So this is keeps going. So this is derivatives. Okay, yep. And that's a lot. And this is Bitcoin here compared to the whole scheme of thing of derivatives. Look at that. Oh dear. So just let's put things in a little bit perspective. So this is silver, and this is in cryptocurrency and all this, and this is just Bitcoin. So you can see this whole scheme of thing, cryptocurrency and silver is very tiny amount in terms of market cap compared to the world money supply. So there's a huge potential in those two markets. I'm not a financial advisor, just use a due diligence. This is just my personal opinion. And I think we still have room to grow in terms of silver and cryptocurrency. And I don't think gold, because gold is, I mean, in terms of the gold and silver ratio, silver will have a more upside potential than gold. But this is not a financial advice once again. So let me know what you think about all this world's money and market in this scheme of thing. And do you think we have huge potential for growth of silver and cryptocurrency? And please comment below. I want to hear from you. I was supposed to do this video Wednesday and Thursday, but I'm just traveling. I was traveling, and it's hard for me to do all this video while I'm traveling. So I was able to get it out because this is the part 2 series of the video that I create on Monday, which is this one. So check it out. So please comment below what you think about the cryptocurrency and silver market or in this whole scheme of thing. Do you think we still have a lot of huge potential for growth? And also, just one last thing I want to talk about is go back to this chart, psychology of trading. So if you ask yourself, if you study closely, what market cycle are we at right now? So another thing is a lot of people, do you think we are in accumulation? We should start accumulating, but just be very careful. I don't accumulate stuff just based on sentiment or anything. I look at the indicator. If they meet all my indicator, I will buy. Just like because anytime you put emotion in trading stock or trading cryptocurrency, you're going to lose tons of money. So just do some homework. If you can identify which phase are we at right now, you are in a better position than the rest of the herds. And also just be careful out there. People keep on saying, oh, we are going to the moon, you're going to accumulate. But when you accumulate, you have to look at the chart and everything based on indicator before you buy. So just don't listen to a whole bunch of random YouTuber. You just accumulate. So you just stay safe, be careful out there. So let me know what you think. Which market cycle are we at right now? And also, what do you think about the whole scheme of thing in terms of the silver and cryptocurrency and all that in compared to the total world's money? That would be very interesting. So please comment below. I would like to hear from you. And if you found this video helpful, please smash the like button and subscribe to my channel. Also share with your friends. And also you can follow me on Twitter as well. Sometimes I try to tweet more about certain article. You can read along because I read a lot about financial market nowadays. Not nowadays. I studied all this probably a while back as well. Anyway, so also make sure you share with your friends. Crypto deep divers, remember, we the people take control of our money. Stay wise, stay safe, peace. I'm not a financial advisor investing in ICO or cryptocurrency or any stock market or any financial instrument has inherent risk. Please use a due diligence.